U.S. natural gas futures climbed toward $2.93, rebounding from the 5-month low of $2.83 in the previous session, supported by stronger LNG exports. Feed gas flows to export plants have averaged 18.7 billion cubic feet per day so far in February and are on track to set a new monthly record. Still, upside momentum remains limited as weather forecasts have shifted milder. Above-average temperatures are expected across much of the western U.S. through the month's end, reducing heating demand and easing power sector consumption. With winter approaching its end, traders see a lower probability of a late-season cold spell that could significantly tighten supplies. On the supply side, production remains elevated. Lower 48 output is averaging 108.7 billion cubic feet per day in February, compared to 106.3 billion cubic feet per day in January, reinforcing the view that the market is currently well supplied. Tomorrow's storage report is likely to define the near-term price trend. Although expectations appear bearish, much of that weakness seems already priced in following the recent sell-off. More importantly, the next two reports are projected to show larger than normal withdrawals, potentially widening the storage deficit to around 60 billion cubic feet versus the 5-year average. Under these conditions, if the upcoming report shows a draw larger than 54 billion cubic feet, it could trigger a bullish reversal and push prices back above the $3 level. We will continue to closely monitor this dynamic, so if you want a deeper and more detailed breakdown of how it may impact prices, consider joining the channel. Meanwhile, today's green candle may also be an early indication of a rebound, as current prices remain well below an estimated fair value near $4. That fair value is mainly determined by the storage surplus or deficit versus the 5-year average, European inventories and pricing, the overall supply-demand balance, and seasonality. However, the key structural bullish driver remains the expected ramp-up in LNG exports from projects such as Venture Global's Plaquemines facility and Golden Pass LNG. Combined capacity additions through 2026 are expected to add roughly 3.5 billion cubic feet per day of incremental demand, strengthening the longer-term outlook for U.S. natural gas. From a technical perspective, today's green candle may represent the early stages of a rebound. Immediate resistance is located in the $3 zone. A sustained move above this range could open the path toward $3.20. On the downside, key support is seen near $2.80. A break below that level would likely attract renewed selling pressure, while consolidation above it keeps the recovery scenario intact. Overall, the market is balancing strong LNG-driven demand growth and forward capacity expansion against mild weather and robust production. The next storage print may act as the catalyst that determines the next decisive move. If you're looking for a more detailed breakdown of the market, consider joining the channel. Members get early access to new videos, so you can see the analysis before everyone else. Thanks for being here, see you in the next update.